I am sure you will agree with me that the housing market has taken a shift. And if you are thinking about buying a house, maybe this is the thing you have been waiting for. But there is one thing you cannot ignore, which I'm going to reveal in this video. Let's dive in. According to what the mortgage point is saying, that since January 2025, we have seen an increase of about 12.9% of inventory year over year. Probably one of the highest increases we have seen in the last 4 years. And if we go back to the dates of COVID, then you remember what happened. But let's take a look to these, what this article actually talks about. And it says that according to a new report from Redfin, home buyers have seen most options since 2020, but a few are bidding because rising housing costs have made monthly payments tough to swallow. Redfin found that pending home sales in January fell to the lowest level on record aside from the start of the pandemic. Pending home sales dropped about 4.2% month over month, the largest decline on a seasonal adjusted basis reported since August 2023. So if you look at this graph right here that I have showing you here, it's pretty obvious that when we hit March of 2020, look at what happened to the inventory and look at where we are right now and look at the line. The trend is that we're going to go up. Now, is that going to be that we are going to reach these, according to what this says, we had about 2 million homes for sale back in 2020 in March. Are we going to see, right now we're seeing 1.279. So my gut feeling is by June 30th, we'll be very close to the 2 million homes, which again is going to soften things a little bit for sellers in terms of activity and offers, but it maybe is going to be better for some buyers that are out there. But here's what I want you to pay attention and be very careful. Inventory still remains tight in some parts of the country. Now, places like Florida, California, Houston, Texas, and all that part of it there, maybe that little bit more of supply. But here's what I need you to be very careful is if you are a buyer, you have to think about the interest rate in the long term. Yeah, some people say, marry the house, date the rate. Well, guess what? So many of my people that at some point wanted to date the rate, they ended up losing their home. So that's a lot of BS. I think you have to be very careful with that. You can always refinance, but inflation, according to the Federal Reserve, inflation still remains a threat, especially under a high tariffs environment. A lot of people are going to have to think twice before they can pull the trigger. So be extremely careful with this. So this is very important data that I want you to pay attention right now because it's really crucial for you to know and understand this. Let me read it to you. It says home sales prices. The county median existing home sale price in January 2025 was about $396,000. If we go back to the days of 2020, this number was more like $230,000 around the country. So this is a big, big, big jump according to NAR. That's a 4.8% increase over the last year, according to this. Inventory, the supply of homes for sale, it's increasing, but not fast enough. Per NAR data, the inventory of unsold existing homes was 1.18 million units in January 2025. While it was up significant 16.8% from a year earlier, is still on the 3.5 monthly supply or month of supply, which is, it says for us to be on a buyer's market, we need to have about 6 months of supply, 5 to 6 months of supply. It's when we realtors call a buyer's market. So we still are on the seller's market, but you see how the trend is starting to push things up, that we at some point are going to be very close to that line that divides the buyers and the sellers market. So this is very important that you pay attention. Days on the market with lofty prices and high mortgage rates still putting a purchase out. Days on market with lofty prices and high mortgage rates is still putting a purchase out of reach for so many buyers. Homes are taking slightly longer to sell in January 2025. I agree. There are more days on the market. That it's a trend that we are seeing with days on the market. And I want to talk about something that I have here that I typically speak with my sellers and also with my buyers as we are considering making an offer on a particular house or just looking at an overall trends in a market. So going back to the days on the market, this is something that I always highly, and I'm going to put a little screenshot right here that you can see. You see the days on market, right? This is just an example I did for one of my clients. So here's what happens, right? As the days on the market are, so here's what happens. The best chance for you to obtain the best sales price as a seller, it's at the beginning when you hit the home hits that date on the market. So in the first 10 days is when you really are going to be testing the market. It's the same as you talk about the stock market. You have a support and a resistance line. So this is kind of like the same. If in the first 10 days you have listed a house, or the house is being on the market and in this kind of environment, and the seller is still not under contract, that might be a sign that the price is too high. So this is where you have to really take advantage of a lot of these things that I'm talking here that you need to prepare. So the more you educate yourself as a buyer right now to understand what your options are going to be, especially if you're going to be moving up into a bigger home, this is what you really need to be. And if you have to sell and buy at the same time, this can be tricky. So you got to be careful how you're going to price a property, but also if a house has been 10 days or more on the market and they still have not received an offer, that to me, it hints an opportunity for a buyer to start to negotiate with this home seller and perhaps get a really good deal down the road. And this is a very interesting, this is an article I just recently pulled from Realtor.com. Says what a recession could mean for a housing market. Listen, I'm not talking about a recession, okay? I am not saying that. But let's just look at from different options, right? So it says what a recession will mean for home prices and sales. By definition, a recession brings higher unemployment, increasing financial strain for many households. As a result, buyer demand pulls back and home sales fall, which is true. What? However, the housing market is already fairly soft. With home sales near record low levels, last year, home sales were the lowest since 1995. And early data from this year has shown a little bit of improvement. Though recession would mean buyers pull back even further, there isn't much further to fall. So the drop will likely be tame relative to recent sales volume, says Realtor.com. So, according to Realtor.com and the March housing data, inventory is nearly back to the pre-pandemic average in the West and the South, where it's down by 2.1 and 3.2% respectively. But in the Midwest and Northeast, there is still a long way to go. Inventory is down 45.2% and 57%. So you see, there is a softening, but that doesn't mean that more sellers are now putting the homes on the market. Now, I'd be curious to know wherever you are located right now within the United States, even our neighbors in Canada, what are you guys are seeing in your market? Are you guys seeing multiple signs of homes for sale in your neighborhood, or are you only seeing one sign, two signs, and you see the under contract right away? I'd be curious to know. Let me know here in the comments and drop me a line. Where are you posting from? Because I'd be curious to know what you're seeing over there. This right here is the number of the price increase. 47% is the price increase that we have seen of real estate since 2020. So this is actually going to cause a little bit of a problem when it comes to affordability. Where are we going to go with all this? Let me explain it to you. So, according to this article from the New York Post, it says the home prices have gone about 47%. It says a recent analysis by Resi Club of Case Shiller National Home Price Index has unveiled a jaw-dropping surge in U.S. home prices, soaring a lofty 47.1% since the dawn of the decade. The boom witnessed in the early 2020s has outpaced not only the growth of the 1990s and 2010s, but is now threatening to surpass the entirety of the 2000s. With these increases, this is a threat to affordability for many people. And in one of the most recent articles I came across that it says the baby boomers are the most active home buyers in this kind of market right now. How would have thought the baby boomers will be actively looking to buy homes in this kind of market right now? Well, They are the ones that are buying most of the homes right now because they're the ones that have the money to buy these homes. Millennials don't have enough money to buy a house. Some of them, and they're barely making it, in my opinion. So this is affordability. It's a risk. And the important factor here in this country that can make it or break it down the road. Okay, this graph is gonna make your head go bananas. This is a beautiful graph that has been put together by Madison Trust. It's an extremely nice graph that I wanted to dissect with you. So, this is talking about average home cost here since the early 1970s, 73, 80, 86, 90, 2008, and 2020, right? When COVID got. So here are the different price points where things are, and there have been some up and down, some peak and valleys. But look at this: from 1963, the average home cost was $19,000. I was going to just forward to 2023, $492,000. Now, let me ask you this: has your income gone up this much based on what this graph is showing you? And I guarantee you the answer is going to be no. Now, this is another good graph that I came across. This is from the census.gov. And basically, what this it's just showing us here, real quick, is the increase of the income increase based on your of race and Hispanics. And look at how the growth has been in terms of income. So this is Zillow, and this is the area where I sell homes. They're all different type of prices on homes, but for example, this house, you haven't seen that in a long time. Price cut $20,000 less. Okay, this is one property that is showing you $20,000. And remember when I showed you that they've been 10 days on the market. Remember that graph? Remember this graph that I showed you before? That had been 10 days on the market. They tested the market, nothing happened. Now they just made a really small price adjustment, but they're chasing the market. That's what I call it. They're now chasing the market. Another one with a decent price cut for the price. This just got caught on 416. This house has been on the market too here for a couple of weeks. Again, it just they're just really trying to test the market just to think where things are going to go. But this is something that you didn't see before. This one. This property, I have particularly been inside of this model home myself. This house had $100,000 price adjustment. So going back to those that understand the the candles charts in stock trading, they hit that resistance and now it's just coming down that number. And it could be that this number maybe needs another $100,000. I don't know. But this is the reality of the market that we are in right now. So let me give you what going to be my final thoughts on implications for buyers and sellers. Given how unpredictable the market is right now, buying a house should be looked at as a long-term investment. So if you are going to buy this property and stay in this house in the next 10 years, 15 years, go ahead and buy it. This is the best time to probably for you to do it and try to negotiate. You have to really budget to purchase a house. Most buyers, if can, should be able to put 20% down payment. I know it's a lot of money. I know that's not what everybody wants to hear, but if you at least can do 10%, that should be a very good cushion for you to start this process. So try to put as much money as you can without risking your savings. Now you have to also take into consideration moving expenses. I recently did a video that talk about the expenses that buyers should avoid when moving into a new property. I'm going to put a picture right here and the link is going to be below so that you guys can go and watch that video. Financial planning, it's important, and you should probably consider using there are different rules out there. There is a 50-30-20, there is a 75-15-10 rule, and there's so many rules, but let me give you the 75 15-10 rule, what it means to you. You should allocate 75% of your income to all your expenses. This includes living expenses, your cost of everything involved with you to live. Maybe a 15% should go to investments or you can do a trade because the 10% should go to savings. Maybe in times where things are a little bit uncertain, maybe you want to do a 15% to savings and the 10% in investment. And if things really, really suck when it comes to investment, maybe put it out entire 25%. And I know this is a lot to ask because a lot of people are living paycheck to paycheck and they are maxing their budget. So there may not be enough room. And this is where you have to reassess your finances, your expenses. The economic uncertainty and the potential looming recession fears is what a lot of people are afraid of. They just don't know what's going to happen. Tariffs are going to change our whole world. China and United States will continue to fight, go, back and forth when it comes to all these changes. Nobody knows what's going to happen. There are things you can control and things you cannot control. As a buyer, you can control how much money down you're going to put, how much money you're going to set aside for savings, repairs, and moving expenses. How high you be willing to pay for this house. What kind of inspections do you want to do? The willingness to buy a house that maybe needs more work than what you can tolerate. The idea of maybe buying points down or asking the seller to help you with closing costs. A lot of these things are the stuff that you have control. Hey everybody, welcome to the end of the video. I'm Robert Garcia here, your host, and I'm here to help you navigate this raw and unpredictable real estate market. Do me a favor, if you like content like this, give it a thumbs up, like it, subscribe to my channel. I promise I'll continue to deliver just content like this every week. If you have any questions about anything about real estate, there is a link here on my profile that you can get a hold of me. If you're looking to relocate to this area and you want me to help you with this or to any other area and you need to find a real estate agent that can be vetted and trusted, do me a favor, fill out the form over there and I'll help you. I'll see you guys in the next one. Take care. Bye-bye.